Welcome to the Wealth Stream Podcast. The team at Hightower Great Lakes share their insights and passions for empowering their clients to live their best life. In this energetic podcast, we will take you on a journey to help you navigate your financial future, overcome life's challenges to reach your financial goals, and find the financial clarity you've been searching for. Let's explore the downstream impact of your wealth and what it means to you, your family, and your community to live greater.
Hello and welcome to the Wealth Stream with Tim Scannell from Hightower Great Lakes. Good morning, Tim. How are you today?
Well, I'm cold because it's snowing, but other than that, I'm feeling pretty good. And I've had a little too much coffee, so I apologize in advance.
No. We like it when you have a lot of coffee, and I'm sorry to hear that you're not in the South Pacific, like we were talking about pre-podcast here. You know, the audience doesn't get to listen in on our conversations, but we were just talking about how nice it would be to be in the South Pacific.
Yeah, there's some things that the audience should not hear. Okay, and that's part of it.
That's probably it. Okay, we're going to move past that
Right.
Speedo session that we were talking about. Mm-hmm. Anywho, so what are we talking about today?
So today, I want to talk about cash flow. You know, cash is king. And, you know, when we do our planning for clients, primarily with business owners, you know, we focus on investment management like everyone does, and I think we do a great job at that. But where we really spend a lot of time and energy is on what we call advanced planning. That includes wealth transfer, you know, making sure that if something happens to you, Eric, that your assets move quickly and accurately and, you know, to wherever you want them to go. Or wealth protection, you know, making sure that as you set up your business, as you're transitioning your business, it's not unjustly confiscated by, you know, litigation or things like that. We do a lot of work with charitable planning. Wealth enhancement is really looking at your debt structure and tax planning. And today, what I want to talk about really is cash flow, because we've done a fair number of podcasts on value drivers and you know, how to make sure you're getting the maximum when you exit from your business, how to plan for that, how to focus on that. We have a series of videos on them, white papers, and really cash flow is a theme that goes across all of those. So I just thought today I would just focus on, you know, 7 ways cash flow impacts your exit. And hopefully the listener, the entrepreneurs listening today will pick up 1 or 2 good ideas on how they can really focus their business more on cash flow and how that'll impact or help them exit down the road.
All right. So you got 7 ways. What's number 1?
All right. So number 1 is, you know, what we call business growth stability. So when I look at a client's business, when I work with a valuator, like a business valuation person, like we had, you know, Greg Clark on one of the podcasts where we talked about the benefits of setting that initial value. One of the variables, the primary variables that a buyer, whoever the buyer will look at is, you know, cash flow, steady cash flow. So when I go in and work with some business owners initially, what I find is a lot of times they'll work with, or they'll treat their business a little bit like their personal bank account also. And following tax law, so there's nothing bad about that in general. It's just that when a business owner is selling the business down the road, when a buyer comes in, they want to see a balance sheet, they want to see a financial statement that shows cash flow, that shows growing cash flow. And so if you're pulling excess expenses out, you know, in order to pay for trips and things like that, or if you're not really separating business from personal, what happens is you understate cash flow, and as a result, you understate the value that you can get on the back end. So one of the ways that I think cash flow impacts business, and this is really across the board, not just based on what I see, but talking to business valuation experts, talking to CPAs, reading about this, is one of the number one reasons that why, you know, clients need to focus on cash flow is really because we need to drill into the fact that growing, sustainable, demonstrated cash flow is really one of the key variables that can determine a higher value when they end up selling.
All right.
So it's kind of this balancing act, right? So on a day-to-day basis, I certainly would like to pay the least amount of tax. I certainly want to expense as much as I can. I would love to pull out as much cash flow as I can. But by doing that and paying ordinary income tax rates on that cash flow now, I might be foregoing getting a higher value and maybe paying a lower capital gains rate on the back end. So again, it's a strategy, but that's one of the first reasons why we like clients to focus on cash flow.
All right. What's the second?
The second one is as you get into talking about or planning for how you're going to exit, how you're going to basically transfer ownership. So that could be an internal sale. So maybe I have one or two key people, a management team that ultimately can take over the business, and we want to do a transition to them. If I also maybe want to sell to a competitor, if I want to sell to a financial buyer, somebody who's coming in to just invest in the company, for the rate of return, possibly, one of the things we've seen recently in the last couple of years is, family offices. So somebody sells a business, they create a family office, and then they use their expertise in business to look at buying companies for investments. What happens is if you don't focus on cash flow now, you're limiting the number of options you have for ownership transfer. So when we do a lot of modeling, and modeling just says what ifs, if you wanted to sell internally to these owners, if you wanted to sell externally to them, how is that going to look? How does that impact as the owner? How does it impact the buyer, the seller? It limits the number of models we can really look at. It limits the number of options. And I think in general, you would agree, Eric, that the more options you have, like if you're selling your house, right, you want to make sure that you have multiple buyers so you get them to compete. And if you really just have 2 or 3 buyers or one buyer, you don't have control. And so options are really important, and options are limited if you're not going to be focusing on cash flow.
Got it. Yeah, no, that makes perfect sense.
And then the third area would be what we call incentive and retention. So on one of the podcasts, or a couple of the podcasts we did in the past where we talked about value drivers, where we're focusing on, the key variables that impact, how valuable your business is. One of the things we talked about was your management team. Mm-hmm. So we like to go in and help our clients, first of all, evaluate, do we have the right people? Are those right people in the right chairs? So maybe you have an operations person who should be more of a salesperson or a CFO, and this happens a lot with business owners with their family members. You wouldn't think that you would have your number crunchers in charge of sales, but sometimes we go in there and we see that, and we think, we kind of make the recommendation after do help bringing in consultants, doing evaluations, and talk about the fact that, maybe you have these right people, but we just need to rearrange the chairs. But regardless, when you go in there, once you go through the process and you determine, yes, I've got the right team, you need to make sure there's incentives in place so that they stay. Especially, so you've got this great operations person who's with the firm, who is really responsible for making sure that you're investing in the proper technology, your operations, your manufacturing, or your construction, your bidding, your implementation is all going smoothly and profitably. Well, if that person is going to leave as a result of you exiting or selling, you're not going to get the same price. So when a buyer, when they come in, they're going to want to make sure they're going to want to look and evaluate, not only do you have the right team, but this third point is, are there incentives in place to retain them? Are there incentives in place to make sure that they stay with the team, with the company, if there is a sale? And if you're not focusing on cash value or cash flow, your options are going to be limited. There are things that we help clients with, like non-cash incentive plans, phantom stock plans. We can create employment agreements where the key people can get a portion of the sale, for example, the appreciation of the growth. They can participate in that. So it doesn't have to be directly transferring ownership to anybody, but it really has to be saying, these are my key people. These are the ones I wanted to create and lock in with employment contracts, give them incentive, and tie those incentives to the same incentives I have as the owner, which is to maximizing my exit when I leave. So, and you cannot do that with cash flow. So that's a really, really important part.
Yeah, I mean, it sounds like there's a lot of options. And there's a lot of things to explore just in that one little section that you just spoke about.
Yeah. So we have a whole series of white papers, samples on modeling, on the how to, like, we have a great white paper we prepared this year on how to create incentive plans for your key people and why it's important. That's also a key part of the Value Drivers podcast and the video that we did. So it's more complicated. It's a whole separate podcast and whole separate series of details. But that's one of the key things why you want to focus on cash value, cash flow, I should say.
Yeah, and let's make sure that at the end of this podcast, we give people an opportunity to go find those resources, on the website or wherever they're at.
Perfect.
All right, sounds good.
Number 4. So the fourth reason why you need to focus on cash flow as it impacts your exit strategy is that it's a way we can help, you can help minimize the risk. So if you think about COVID, right? We're going through this tremendous overhaul of business, and they're, setting aside the awful result of COVID, the people dying, the restrictions, the complete negative effect. There are some businesses that are succeeding there, that are some that are not. And it's not necessarily just the industry. Obviously, if you were supporting the airline industry, you're in trouble. If you were supporting the hotel and entertainment industry, you're in trouble. But, you would think that restaurants are all in trouble, but not all of them are. When I talk to my clients, when I talk to my CPA, she's told me that a little more than half of the restaurant clients are actually doing better because they've been able to adapt with remote distancing and with carry-out orders and things like that. Now they were doing it with fewer people, so the employees are the ones feeling the burden of it. But some clients, customers, depending on the industry, have been able to respond to reduce risk. But if you think about it, when you're coming into COVID or something like that, or some major disruption, you look and you say, well, why did that company, which had such a great brand, had such a great product, go out of business, and maybe this other company didn't? And typically, if you look back behind the curtain, if you're Wizard of Oz and you go back there, you'll see that one was maybe highly leveraged, one had too much debt, cash flow was not positive. I mean, maybe cash flow was even negative, and they were just trying to grow through it. And maybe the companies that have survived and done well, and I've seen this with my contracting and construction clients, the ones who have done well have lower debt, higher cash flow, higher margins, and they're the companies that focus on cash flow to reduce their risk. So, it's a really, really important thing that we look at, and one of the strategies we implement with our clients is something we call stress testing, and we go in and we'll just help them look at all the different scenarios. Now, you couldn't have predicted COVID, but you can predict events like that. 2008 was a dramatic one also. You can predict them, and you can say, well, if this happens, how will you respond? If this happens, and your cash flow, your balance sheet, your debt structure is here. So we can really go in and do a pretty thorough, analysis, a stress test to make sure that clients, as they're looking at their business today and they're planning on exiting down the road, that we can mitigate the risk that they have with the cash flow related.
Yeah, and again, it's not like you can predict everything, but just having a plan, being prepared, working with a professional like you with your team, and how much you take into consideration and how much you discuss with your clients. I mean, that's huge, and we've talked about that many times in this podcast. But I think that is something that everybody needs to hear multiple times, right? I mean, it's so hard as a business owner sometimes because you get wrapped up in just the daily things that you're doing, and then 2 years go by. You're like, oh, I should probably do something about A, B, or C, right? So no, exactly. I love the fact that we are touching on this again, and we have other resources for people to get to and learn more.
Yeah, and so number 5 is really, we've talked a little bit the first 4 about the business, but number 5 really deals directly with the owner and the owner's financial security, the financial security for the owner's family, the next generation, maybe their favorite charities. Mm-hmm. And the key is that if you look at the cash flow being generated by a business for the business owner, and you compare that to the value of the business, generally they're taking out a much higher distribution or rate of return or cash flow distribution today from the business than they could post-sale, meaning that if you have like a $5 million business and maybe the owner is pulling $250,000, $300,000, $400,000 a year out of the company, if you sell that $5 million business and you, after taxes, let's say net, $4 million or and you invest that portfolio, you're not going to be getting the same amount of cash flow. Now you've locked in the gains, you've reduced your risk, you've positioned yourself to move forward with less risk into retirement. But we need to really talk. We try to focus clients on the fact that from your financial security perspective, cash flow today, in terms of what you're taking out of the business, will look very different from cash flow when you do exit. Your estate plan, today, and the risk associated with that, and the cash flow being generated, maybe supporting family members, children, family members on the payroll, that's not going to happen once you exit. So we need to talk about that. But also financial security in terms of, if you even just look today through COVID, I'll just use an example of my dentist. So, the last 10 years, the doctors who had private medical practices that we worked for have really all gone. They're all working for hospitals now. And we're starting to see a little bit of that in the dental industry. So my dentist, they responded quickly. They shut down like everyone did, but I was able to go back when they opened. You pull up outside, they call you. They're practically wearing hazmat suits. They take your temperature. I mean, they're doing all the things they can. But they were able to survive the 4 to 5 month period because they had focused on cash flow. They had focused on, a lean balance sheet. They kept all their people. They were able to sustain it. Whereas I was reading about this another case where some of these companies that are going through and buying dental practices, and these dental practices themselves are very healthy. They're operating very well, but these entities that came in and bought them are highly leveraged, and a couple of them filed bankruptcy. So the point is that you really need to focus today as a business owner between now and when you want to exit, focusing on the cash flow and being prepared, and also having a picture painted in the future about how your cash flow will look, going forward. And then, like I said, being prepared for instances like COVID or other events that will happen in the future to make sure that that's not going to harm your personal financial security. Like Eric, what I always do is talk to you. If I was talking to you about that, I would say, Eric, what do you and your wife need to maintain your current standard of living when you do leave? Because if you don't have that right now, we need to make sure we accumulate more and we make that business grow.
Yeah, absolutely.
And then the sixth part goes back to the business a little bit. And, one of the things that business owners tell me when they're financing projects or financing business or acquisitions is, I don't want to have personal guarantees. So, that's a constant battle between business owners and banks, where the banks are saying, well, sure, we'll lend the money to your business, but you're going to have to sign off a personal guarantee also. And clients, understandably, right, because they don't want to put their other assets at risk, they over time would love to get those personal guarantees gone. And if you're going to also do an internal sale, these new buyers typically don't have the balance sheet or the net worth to support, some of the bank financing. So it gets complicated. It gets complicated in terms of these personal guarantees. And I've had situations where client retires, does an internal sale. He had to keep personal guarantees to finance the whole thing. And he was gone from the business. He wasn't controlling it. Obviously, these new owners they ran it to the ground. And so not only does he not have the money because he was relying on the cash flow from the payment for the purchase, but he also has these personal guarantees to the bank. And it's just it's quite terrible, right? Because obviously you can't make that back up. So the financing piece is critical. And this is part of the stress testing that we do with clients when we're helping them plan for an exit. How do you get off those personal guarantees, and how do we structure a sale to minimize your risk? Because I'm fine taking all the risk in my practice, my firm, Hightower Great Lakes, as long as I'm here. But if I'm gone and I'm not, here watching daily and controlling my risk, I don't want to be responsible. I don't want to have those guarantees.
Yeah, absolutely. That would be, I can't imagine how stressful that would be thinking about that. It's not like you could relax, right, after a sale.
You're right. You can't because, psychologically, it's hard enough walking away from the baby, this creature you've built, right? There's always a little bit of seller's remorse. So if you compound that with the personal guarantees and then you're relying on distributions from the new owners, it just creates these natural inherent conflicts, appearance versus reality. It creates stress, anxiety, and you're supposed to be retired. You're supposed to be not thinking about that. So, the financing piece is a really very, very important part of the stress test, and one of the most, also a critical piece in terms of why you really need to focus on free cash flow.
Yeah.
And then the final piece, which is lucky number 7, is really cash flow is critical for investment in capital. So if you think about the world we live in, we are constantly required and asked to invest in better and faster technology. I mean, if you just think of like how companies have responded, I was reading an article about Nike, so you would think that with everything going on in the retail stores and the shopping malls with the holidays, this is their biggest time of year, that Nike's hurting. But, corporate earnings announcements are up 25-30%. So a lot of these major vendors have just very quickly redirected, from the shopping malls, from the brick and mortar to online. I mean, and they've all done it. Target, Walmart, the big ones, but also the small ones, the small flower shops, where we used to get flowers delivered, they've all responded. So the point is those all cost a lot of money. You have to invest in new delivery systems. Now, you don't always have to buy them. Sometimes you leverage and you partner with the people who have them, but it's still expensive. And you also have real estate. So, like one of the things we're seeing now is a lot of companies are reevaluating how much space they actually need. And it's really hard to determine because we don't really know for sure how many people are coming back. So our office, we're all back. We need the space as far as I can tell for now, right? But that investment in capital, if you don't have demonstrated 2-3 years of growing free cash flow, many banks are just not going to look at it right now. I can tell you from experience in the last 5-6 months working with banks, the regulators have all tightened up dramatically.
Yeah.
Even for mortgage loans, the requirements are just so much higher and it's so much harder to borrow. Appraisals are all coming in much lower. So the regulators understandably are pressuring the banks to be much more conservative, tighten the credit, which is not what we need right now, but I understand why they're doing it. But the point is, the people who have a demonstrated track record, the companies of free cash flow, growing cash flow, they're going to get the financing they need to perhaps buy some of these companies, their competitors, their peers that maybe aren't as well capitalized. So there's a lot of opportunities right now that you won't be able to take advantage of if you haven't been focusing on cash flow.
Yeah. Yeah. I find it so interesting to see the businesses that have adapted, that have adapted well. They had a presence in technology or consumer convenience, I think I would like to term it for this podcast at least. Maybe we'll change that later. But they really kind of had to jump on it before COVID hit, right? So, but I find it interesting to see the transformation. So I'll just use a grocery store as an example. The grocery stores around me and even Walmart, which not necessarily a grocery store, but supplies, whatever, they had maybe 3 or 4 parking spaces dedicated to online orders, online pickups, right? Before COVID, pre-COVID. And now I go to my local grocery store and they've probably got 12 to 15 parking spots dedicated for online pickup because it's touchless. It's interactionless. I don't know if that's even a word, but we're going to use that as well. They've enabled people to order, pull up, park, pop your trunk or pop the back door. Somebody comes out, puts your stuff in, says bye, and you drive away, right?
Yeah.
And I just see this. was such rapid growth of that, and because everybody needs that. Nike, for instance, they sold online before. They sold in a lot of different types of stores online before, a lot of different venues before. And so it wasn't something that they had to scramble and do brand new from the very, very start. I know this isn't a podcast about COVID. I know this is a podcast about, cash flow, but thinking about the businesses that are doing the best, they didn't wait to see what would happen. I think this is going to blow over in a couple months. So I'm going to wait a couple months.
Yeah.
I would encourage, and I know that you work closely with your clients and your business owners, and you do give great advice when it comes to what you're seeing on the horizon, and you share that with them. I know you do a tremendous amount of research and reading, and you bring that value to each and every one of your clients. So again, this content was fantastic today. I know that there are resources that you have that you want to share with folks, and so let's get to that here in just a moment. But Tim, I know that you have some pretty exciting things coming up as well. Anything you want to share that's kind of going on in the future, maybe even later today as we record this?
Yes, so later today I have the opportunity to do a Zoom interview with Mr. Wonderful, Kevin O'Leary. So
and I thought I was Mr. Wonderful, Tim.
Well,
gave that name to somebody else?
That's what I said to my wife Nancy. I'm like, I know you think I'm Mr. Wonderful, but
That's right.
I'm actually interviewing the Mr. Wonderful. He probably has the brand.
Yeah, I'm pretty sure we should be very careful about that. Trademark. Anyway. Okay.
Yeah, so he's on Shark Tank, and
Yes.
That's where people probably know him from. And we're going to have a video link, a recorded link for that on our website by the time this podcast comes out. So I'm looking forward to that. I've never done one of these before, so I'm a little nervous. I'm just telling you, but people are teaching this old dog new tricks.
That's right. You're going to do fantastic. I'm so excited about that. I'm looking forward to watching it. But that is something that our podcast listeners are going to be able to access, and the white papers that you spoke about and other items that you spoke about today. How do they get those? Where do they go specifically?
So you go to our website, Hightower Great Lakes. It's htgreatlakes.com. You could also email me at tscannell@hightowerinvestors.com, or just call me 219-246-5370. And really, the biggest takeaway today, I think, from me is cash flow is king. Stress testing is critical, and that's the way you evaluate whether your cash flow is going to help you with these 7 different topics. And if you really want to exit, and I think eventually it's inevitable, right? Everyone has to. You really need to think about this, and we can help you, and this is really what we do. So we'd love to help you.
Yeah. It's I think it's the difference between exiting with a nice plan for retirement in the future, or exiting with a toe tag, right? It's one of those two.
And I think, Eric, this is where you play the Pink Floyd song Money, but I think there's trademark issues, so maybe not, but maybe you could just sing it. Just kidding.
Well, I still think we'll run into a problem there. So what I want to do is we'll just take 30 seconds of complete awkward silence. Everybody can imagine the song playing.
That's probably
in their
better.
Head. Yeah, probably
exactly.
better. Or not.
Yeah.
Either way.
Yep.
All right, Tim. Well, again, fantastic content today. Thank you so much for your time.
Oh, thank you. I really appreciate it. Thank you very much.
Yeah, absolutely. I just love getting together with you. I always learn something, and I know the audience does too. And speaking of you, the audience, thank you so much for tuning in and listening to the Wellstream Podcast with Tim Scannell. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Tim comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. Again, thanks so much for listening today. For everyone at Hightower Great Lakes, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Wellstream Podcast. We hope you gained some valuable insight that you can apply to your life and share with others. Please don't forget to subscribe below to be notified when new episodes become available. And don't forget to live greater. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Hightower Great Lakes. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Hightower Great Lakes is a group of investment professionals registered with Hightower Securities LLC, member FINRA and SIPC, and with Hightower Advisors LLC, a registered investment advisor with the SEC. Securities are offered through Hightower Securities LLC. Advisory services are offered through Hightower Advisors LLC.